Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, December 6, 2019. What I want to start out, brief update on the markets. We'll start there, and then I'm going to go over an eclectic mix of trade ideas, meaning different. These are all being individual stocks, a couple ETFs, but in all different types of sectors. Mostly longs in this update, as I've been highlighting lately. Speak the bears speak on the markets. Yet 90 plus, if not 95% plus of the trade ideas are darn close to 100, especially when it comes to stock market, individual stocks, not talking about commodities. Those have all been longs recently, and that's a lot of my on my watch list. So again, the market, we'll start out here with IWM. IWM did do that back test. And if you recall last week, I said, I favored a back test, and I said I might take it on a back test, and I didn't, and that's fine. I think there's still better fish to fry than the markets, but the point of this video, I'm just to start out here with the equity markets. So far today, now today's not over. I've seen days like this start out big and they get faded. So how we close today, I think, will be important. If we build on today's gains or hold these gains right now into the close today, look, anything can happen next week, but that would be nothing but bullish, because so far, if you recall in my recent analysis on IWM, we had a breakout of that big key 159-ish, 160-ish level. Came back in, and I said, look, it would be perfectly normal for a back test to undershoot. In fact, that's often what they do. It just clear stops. People pile in, maybe think the breakout failed. They try to short it, then they get squeezed, or long step in early and they run them out. Either way, that's normal for a back test to come in a little bit below. And look, so far we've taken out that previous reaction high. So now the day isn't over, but as of now, that's a you can't spin this any other way as bullish, a breakout, back test, and move higher. Yes, there is, there's not. The RSI divergence is gone right now, but let me move this line over here. We'll watch it. And again, something to monitor. And so, as I said, if you went long or want to go long on IWM, you just keep stops in place and could trail it up. IWM could, we could see a rally into year end. Or maybe this thing gets faded by the end of today or Monday. So like I say, the charts are dynamic, and so is my analysis, so we'll follow up. I just wanted to point out that as of right now, again, it's 10:13 Eastern time as I'm doing this video, pretty much nothing but bullish price action today, at least near term. We had that breakdown, back test, big divergences, and so far this is the only correction we had. We took out that 61.8% Fibonacci. That's that top dotted line. You can see the fib numbers over here to the left, and so now it's a let me see if we hit that 78. There's one more Fibonacci level, 78.6, I believe it is. Yeah, there it is, 78.6. We're right on that now, but I like to see the counter trend rallies usually cap around that 32 to 61.8. And I also had, if you recall, price resistance, and that's where I was giving my position. I still am. I have a small short position on the Qs that I'll close out today, maybe even before the close. But certainly, if we close up above that level, comfortably above 203.70-ish, that was my uppermost level. I was willing to give that position, and I'll close that out now. I'll probably even, after this video, set a stop if we take out today's high, because we've had the initial pop. Here's how I'll trade. We gapped up, and I like to let the dust settle. You have order imbalances. You can see it was a pretty healthy gap. This is a 1-minute chart of QQQ. We gapped up. You get order imbalances. You had a bullish unemployment claims report, and so you get these order imbalances, and they take about an hour or so to clear. So it's 10:15. I've traded long enough to see anything is possible. So if we fade here, and especially if we backfill the gap, that'd be pretty darn bearish. So let's just see where we close. But to be clear, as of now, it's bullish. So that's where my stop's going to be, just right above that previous high right there, and they take me out. And we get some type of reversal next week, so be it. I'll just jump back in. But as of now, like I said, I'm letting the dust settle. That usually takes about an hour or so after the open. And then you see what the market is either going to go on, maybe have a trend day where it continues to build on these gains, or starts to backfill that gap. And that's a big old gap to be backfilled. If it does, that would be a drop of about 0.8%. So that's it. Let's, like I mentioned this morning, this is a 60-minute chart. The reason that I'm, hanging in there right now is I posted in the update this morning We have that PPO signal line. Remember the white dotted line. I use that because that's the last of the two to cross. Not a perfect indicator. There was one little whipsaw right there where it crossed down below briefly, but for the most part, you go back in time here, and you can see it's pretty darn effective to identify bullish and bearish trends. You had a bullish crossover here, and it stayed there. Other than that little whipsaw, it told you to be long that whole time. Back here, you had a bearish crossover, and again, I don't use it as a standalone. It just helps to confirm or refute my other analysis. So back here it got you out or kept you short in that little trend. And right now, like I said, we had a sell signal recently, a pretty impulsive move down with that bear flag and everything else. And so right now this trend indicator is still bearish. So when I'm in a position, why I might not normally short right now, if I didn't have a position, I'd maybe wait to see a reversal, see some kind of red candle, see that gap get backfilled and then some. But since I'm already in one, just might as well sit tight. Gapped up today, so there's not much else I could have done about that. But now just set a stop. Really, the market should, quote unquote, if it's going to drop, it's cleared out the opening order imbalances, or should have very soon here, and then we'll pick things up. Okay, so that's that. Let's dive into the charts. I'm just rifle through these fast, show you some trade ideas, update some of the existing trade ideas, because again, there's a lot more money and easier money, in my opinion, to be made anywhere but the broad market right now. And I'm going to start out with soybeans. We had a trade recently stopped out the other day. I posted this update in the trading room. Member inquired about it, and I said, yeah, look good. They just broke out of a bullish falling wedge. Nice. You can see right here. Let me click on that. Oh, yeah, we don't have, just keep in mind, I had to change out the software that allowed the charts to be zoomed. So right now can't zoom, but you can see it here. Beautiful little downtrend line, nice positive divergence, and it broke out, and that is going up here at about 80 at 896. Remember, unofficial trades, because the other one was stopped out, this is unofficial, show you the actual resistance level. I always like to sell a little bit below. Now we reversed, I'm still in it, but we reversed just shy right here. So far, well, this was the update this morning. I said, look, we're coming up on that 896 target where reaction is likely on the initial tag. We were at 893 at the time, and where are we now? Let's see, I know we reversed a little shy of that level. I'm still looking for one more thrust up, ideally. Hopefully we get it. And that would be, I'm looking off the screen here. I have a ton of securities down below. Here it is, ZS. There it is. So look, we reversed at a high. We hit a high of 890, right about 894. There it is, 894 and a quarter. So close enough. I thought we'd get a little bit closer to 896, and now at this point, if you're in it, here's an uptrend line to watch. Ideally, soybeans should hold this uptrend line, get a bounce there. I've extended this downtrend line that I had from before, and there may be more upside. I still like soybeans. They've been getting whipped around as our last trade was stopped out, because these ag commodities are one of the biggest casualties, if you will, the trade wars, back and forth with China and the ag commodities, whereas things, the U.S. stock market's been bullish for the market. It doesn't seem to affect, stocks like Apple and Amazon and Facebook and big tech and all that stuff. They seem to keep chugging along. So again, a lot more opportunities. Since the breakout alone, that one was up in just a few days, about 2.5%. Nothing big, but if you trade futures, it's a nice little lift. Okay, and this morning also in the trading room, it's an unofficial trade for now, but I might add some of these official. I'm going to cover these in this video. Actually, we'll do it right now. Crude. So I posted Crude as a setup. If you recall back here, I had Crude as a short trade idea. I've had it long and short in recent months, but back here, a short a couple times off this 58.67 resistance level, that top line there, and sure enough, it had been struggling. However, when I see whatever, it's just my chart reading, this is coming up, indicator, see the PPO above the zero line, just like I talked about on QQQ and SPY this morning and just a minute ago, how that level tends to act as support and resistance. When you're above it, the trend is bullish, and not only that, when you come back down to it, you also tends to act as support once you're trending. When ignore it when you're whipping around in a consolidation range like this right here. What you want, this is trending right here. See, it's below. you get a crossover above, and that's when you have these, there's a nice downtrend. So either way, we're above it now, and so what I said is, I appeared to break out. I said I went ahead and took a position even before the breakout because it looked good to me, and my plan was to just periodically raise stops. I don't have any price targets, but I'm going to get to that chart now and show you that I like crude and I like the energy stocks right now, especially if the market continues higher. If it craps out next week, so be it. These trades will probably crap out because crude is highly correlated to the stock market. But since that post, we're right here, boom. That is what you call an impulsive breakout. So just shortly after I posted that in the trading room earlier, we just punched right through there with a big green candle. So again, that could be faded, just like this pop in the stock market now, but take it on face value for what it's worth right now. That's a breakout. There's a PPO reversing so far right off that zero line perfectly. And you might get another trade entry. I think it's objective here with the stop somewhat below. You don't want to put it right below 58.67, just like IWM. If it wants to come in and back test that level, maybe it comes down a little below, but somewhere in there. And like I say, I don't see a lot here on this 60-minute chart. I need to dig into the charts a little more, but with a breakout like that, and if the stock market can build on the gains this week, then there might be more upside. And remember, although I've had a couple tactical short pullback trades here, as well as long trades off this level, this is the trend line. This is a trend in crude right now. It's bullish. Make no mistake. There's a price channel. Forget about all the other lines. Just look at this top line here and the bottom line. So crude's in a price channel. At the top of the channel now, so we'll watch it. And being that it's Friday, I'll probably wait until see if there's some follow through next week in both the stock market and crude oil before considering that an active trade. But again, I'm just throwing out trade ideas, and you guys decide whether you don't want to take it or pass and wait for a little more evidence in the charts. Other options, if you don't trade futures, as I mentioned in that post, USO is the crude ETN. I have this downtrend line breaking out right here. We had a little whipsaw there. Not the best defined downtrend line. I'm going to say that right now. There's not a lot of reactions on it, but for a while, I've been overall intermediate term to longer term bullish, just watching the crude and the energy stocks. So since this divergent low back here in August, you can see we've moved up in USO. And now the bigger picture, if you just take a step back, forget about all those lines, look at it this way. Crude is in a trading range and has been most of the year. It's kind of like IWM, if you will, except it hasn't broken out. There's a big sideways trading range since about May, so we really need to break out here to get things going in crude oil. So I want to just say that it's not really an all clear, and that's why I'm holding on, passing it along as an unofficial trade idea for right now. And the other things that you can trade as a proxy to crude besides USO, well, there's UWT. In that post this morning, I originally said DWT, but I made a correction to that. UWT is a 3-time long or bullish crude oil ETN. There's the chart. Needs to pop that 1325 level, so a little more upside, and I think it could run. Otherwise, it could fail there. And you're also, like I just showed you on crude oil CL, you're really at the top of a price channel right now, and so we could get rejected there. I'll tell you, I didn't see that price channel until I started doing this video, so I wanted to point it out. And again, so a little more upside could take us up there, but otherwise we pull back, and that's why I'm not going to, like any trade, I'm going to have a stop on it. If you took or take DWT, maybe, certainly no more than the bottom of this big green candle today. There's your breakout candle. That candle should not be violated. That's stop should be under there. Otherwise, you're probably going to go back down to the bottom of the channel. So there's UWT. And then if you want to, an indirect play on the crude oil would be, of course, the energy stocks. XLE is the big energy sector ETF. There's a downtrend line it needs to take out right there, divergent low. And then the ones you get more bang for your buck are the oil and gas exploration and production ETF. That's XOP. This one I like. It's been setting up for a while, and I've talked about these divergent lows, and they've certainly played out for nice corrections. This is the non-leveraged ETF, 27% gain there. That was a double-digit gain, and these divergences continue to build. So I think the potential heading into next year is pretty good. We'll see what the stock market does, because energy is a component in the S&P 500. But as you can see, it's way off. It's down at multi-year lows with the stock market at multi-year highs. So obviously not the correlation there. And I've talked about this in other aspects. My concerns about the junk bond market, high yield debt, because a lot of that is exposed to the energy sector. But from a step back, forget about what I think might happen in the stock market or this. It's a pretty bullish looking chart. It's a bullish setup, really not an actionable buy signal, because it's like to say divergences, just like overbought and oversold conditions, are merely an indication you're going to get a trend reversal, but they're not a buy or sell signal. Buy and sell signals come on technical breakouts or breakdowns, such as this one. I had a bearish rising wedge. See that big red candle? That's your sell signal. So you had the divergence. You had negative divergence at that point. You had it here, and then right after we did on the RSI. That's when you had your sell signal come. In fact, if I recall back then, I know on crude, and I think on the energy stocks, I even had a minor trend line there on the 60-minute chart. So that was an early sell signal. Right now, I'd have to force it. That's the best trend line I have right there. But anyways, it seems to me the downside appears limited, and this is a constructive chart, and the upside could be quite high. That's XOP, probably 32%. If at minimum, if the wedge breaks out from where we're at right now, and as much as 51%, that would be probably my, at least at this point in time, my max target. And that's XOP. You want to juice it up? Well, you have to remember to, take your position size down if you do. But you have Gush, which is a 3-time leveraged. Looks like they had a split, so they moved all the trend lines. I used to adjust this, but there it is. There's Gush, which is the 3-time bullish or leveraged E&P, holds the same energy, exploration and production stocks. In fact, it tracks the same index. And then if you're bearish and you think they're going lower, then you buy DRIP, which is a 3-time bearish. You can see it's a messy chart. Doesn't look exactly the same due to decay. And then one other sector in the energy sector is subsector, if you will, is XES, and that is the equipment and services subsector of the energy stocks. Just nice looking charts. So I want to share these, and I want to tell you of the 11 sectors in the S&P 500. This one looks the best to me. It again needs a little more upside, and you want to see impulsive breakouts of these downtrend lines or resistance levels. I think these stocks certainly have the potential to run. We know the Saudis are trying to pump up oil with the big IPO they're rolling out, and people are, I think you're going to see if they are successful in bringing crude prices up, undoubtedly these energy stocks will follow. These follow crude for the most part. All right, so that's that. And now I will rifle through just a bunch of miscellaneous setups, and I'll be quick on them. And if any of these break out, or if anybody is interested in trading these and you want me to expand on targets, you can see a lot of the mark levels on my chart. This is SIG, Signet Jewelers. It's just been pushing up against this 1870-ish level. And the PPO, you can see right here, is in constructive territory. It's up above that zero line, has been holding that way for a while now. And so if this breaks out, I could see it running to any or all of these targets right up here. Max target at this point in time would be just below 29 right there. And if you got, just on a related note, Tiffany, another jeweler, obviously big TIFF, was just what was it, a buyout or something? I remember there was a lot of buzz. So Tiffany had a similar thing right here. The charts look similar, and these are two, same company. Doesn't mean that Signet's going to have buyout offer or whatever else. But there it was. You could see it. It looked just like this. It was pushing up against that level. The PPO was constructive at the time. It had just crossed over after a divergent low, and then boom, big gap up, and from there. Now that would have been a hard one. Well, there was a breakout the day before, so technically you didn't miss that. Now, I didn't take it. I didn't have that one on my radar, but that was a 32% pop on that gap up. And then looks like when you see candles like this on a stock, that's usually means the company's going to be acquired. I think that's what's going on with Tiffany, but I remember it was in the headlines. So I just wanted to mention that hey, maybe private equity or whoever else is looking at these jewelry companies, maybe there's some value there. Again, I haven't done any due diligence on Signet, so if you want, do some fundamental research on that yourself. GTT, Global Telecom, has a pretty big level here at about 1073. Nice, strong, divergent low right there at the bottom. Now, yeah, it's run up quite a bit, but that doesn't stop some stocks like this. You know, that one's already rallied 124%. But what I like about it, other than the fact it's been pushing up against this level, had that divergent low, is, I'm going to show you here, the volume price histogram. There's a big old thin zone. You can see these bars right here. The thin zones are comparable to the gap. It's not exactly the same, but when you had this drop here, very few trades occurred. So they tend to work like gaps, whereas once entered from below, a thin zone is usually backfilled. And so that would indicate a move up to 2185. And of course, you have, you know, resistance there. That's where the stock's been stalling. It's not a hard level. It's 1073 because we popped above it once. But I think on the next pop above, especially above a break above that recent high right there from the other day, you can see as I zoom in yesterday's candle, that should do the trick. And you know, you can take that, go take a long position, and just set a stop somewhere below in case that breakout fails. You know, again, not right at, but a little bit below that level. And what are you talking if you get it? Let's say you buy it here around 1073. You're talking 100% return, exactly, a double on your money. And so it's all about risk reward. Maybe it doesn't play out, maybe it does. And if it doesn't, if you're targeting 100% on your money, you can allow yourself a even a 20% stop loss. You might say, Randy, that's crazy. Why would I allow a 20% loss? Well, it's all about position size adjustment. If you normally take $10,000 on a trade and you normally try to make, let's say, 10%, you're targeting, you know, $1,000 profit, and so then you're going to use a smaller risk reward. Now, to make $1,000 on this, you don't have to put in. If you get 100% of your money, you only have to put $1,000. So that you put a 20% stop loss. Again, and I probably wouldn't even give it that much because if the breakout fails, it doesn't look good. I would use a much smaller stop loss. But my point is there, so even a 20% stop loss, you'd only lose $200 on 1,000. So again, it's all relative. So and it's all about risk reward. So yeah, take it for what it's worth. Just want to pass that along to you guys. All right, next up, PBYI. I think, I don't know if it's official, unofficial. I know, yeah, it must be official. We had a breakout. I updated it the other day. It was running nice. It was heading right up there towards that first target. Got checked. So far, this one's simply a breakout and a back test. Really nothing. Now, I don't like that smackdown after the initial run. The breakout looked legit. We were building, but the biotechs have had some weakness the last couple of days. So we had a breakout. And so far a back test, which was successful. We're not moving up strong, but it's a green candle day up 7.6%. Remember, this guy flies, meaning volatility. 10, 15, 20% moves in a day. Lower price biotech stocks do that. You got to be careful. And if you don't know what I'm talking about, in the trading room, there was some buzz yesterday on Sage. Sage is a biotech stock, and in a single day, the gap down to, from the where it closed the previous day, this stock was down as much as 63%. Unfavorable results from a phase 3 clinical trials. I talk about this all the time. I've talked about it over the years. If you trade biotech stocks, you need to know your company. Is it Amgen or, you know, one of the big companies with a broad diversified pipeline, whereas if one drug gets shot down, not a big deal, or is it a smaller company with a lot or everything riding on the success of one drug? And I've seen this time and time again. And unlike earnings gaps, which you can predict and get out of the way of, companies report earnings every 3 months. When you trade biotechs, these random results come out. They don't announce when unfavorable data may come out. A drug can be in the middle of clinical trials, and all of a sudden people are getting sick or dying. Boom, that news comes out. I've seen this dozens, if not hundreds of times, comparable gap down. So now we weren't in this. I mentioned it as a long trade idea yesterday. I took a position, posted it in the trading room, said it was down here, and here, let me find that for you. Here's how you find what you're looking for in the trading room. Just click on the icon, type in SAGE. It's not case sensitive. And there it is. So I guess it was right here. No, that wasn't. I typed the word, somebody had made a post in there, and I said that was sage advice. Happened to be yesterday. That's crazy. All right, so let's try it again. All right, here it is. Somebody asked afterwards, and they might have missed my original post. All right, so there it is, sage right here. This is the post, trade idea, and there it was. Bounce, swing trade, or day trade idea. You could do both. Long sage here around the 60-40 support with a stop below today's lows. That was it. So we had come down. That was a low, and then we rallied from there. And the stock did gain, I think it was 30% from that point. So you could have made quick 30% on a day trade, and it's still up above that level. So this was yesterday. I was at 60-40, I think I said right there. There's yesterday's lows right there, 60-40, whatever it was. I measured it out. It was in here somewhere, and doesn't look like much as a 1 minute chart. 20%. So it was good for, at that point, a 20% pop. And look, there's yesterday's low right here where the crosshairs are, the bottom of that red candle. So we're still above that, and the stock is still up today, about another 7%. So again, like I said, you could have day traded it, trailed it up, got some or all of that 20% pop, or swing trade again with a stop below today's lows. Now at this point, I think it'd be prudent. It was right on there around that 60-40 level. Be prudent to set your stops probably a break even at this point to assure, or entry to at least assure a break even, and let it go. But I have to caution you, with a news like this, sometimes they stabilize for a couple days and there's another gap down. So I want to just say that you can't avoid a stop loss. Will not protect you against an opening gap should it bypass your stop. So very risky and aggressive, as I said in that post. But again, maybe more upside. I think probably an overreaction. From what I've heard, this is a solid company, and there may have been some issues with those clinical trials where people weren't taking the medicine, things like that. And this company could easily bounce. By the way, this was my bounce target right here, about 76.80, and still is, to 81.40 for a swing trade. All right, let's move on to the next one. Where are we at? That's PBYI, I already did. ACOR. This was another one. I think we had an official or unofficial trade. It had a false breakout there. This breakout looked legit the other day, but we've come in and back tested. So although I had a tight stop on it, which were below, I just want to mention it's back testing, and it's still a very constructive chart. It's another biotech stock, and it's a low price biotech stock at that, but it's all about risk reward. I think it's objective here. Whether it plays out or not, and my potential final target, this zone up here, is about 200 and as much as 260, 70, 80%, with that first target there around 60%. So again, small position size allows for a little wider loss, and just throwing these trade ideas out to you guys because this is where the higher profit, much higher profit potential than the market, in my opinion. Well, that's almost factual. TZoo, Travel Zoo, nice downtrend line, bullish falling wedge. Here's your divergence line. This is set up to run, and I may make this an official trade. Targets, you have resistance to clear there. I won't call that a target. I would call that the first resistance level after if we get a convincing breakout. But so you want to be safe, give it the benefit of the doubt, let it run up, pop above 1081. First target, second target, possible third target. Although I could easily see, usually when you get this close, see a nice downtrend line right here coming in, catching all these reactions right here. Usually when you get that close to a trend line like that, you want to touch it. It's almost like a force of gravity, if you will. And so this one may need a little more work, but maybe not. So I want to throw it out to you guys. You can replicate this chart. Make sure to use log scaling on your chart. You're not going to get the same trend lines. And if it breaks out and you want to take it, great. All right, save. Spirit Airlines, potential inverse head and shoulders, bottoming pattern, left shoulder, head, right shoulder. Not the best defined, a little sloppy, not a very well defined right shoulder, but sort of the essence of the pattern. This is the neckline right here, upward sloping neckline, but you also have price resistance that comes in there with it. and that's right around 40.52. So there's one that could run, and I don't see a lot stopping it. Maybe a little hiccup here, but I think it could run all the way in, up to about that 45.75 level. If it breaks out, PPO's in constructive territory, and we just came off a divergent low, positive divergence, so that one I like as well. Just needs a little more upside to trigger an objective entry. JCPenney, not my favorite. Obviously just a a department store that's been clinging to life for a long time, kind of like Sears, but just a level. It's sort of a cup and handle pattern here. Here's your cup, there's your handle, and so it really needs to pop above 128. I know this is a comeback story, so just one to watch. Again, not one of my favorite, but I'm throwing out these ideas. Maybe that's your type of setup, and that's my job here, to give you guys trade ideas and let you decide which ones to take. Maybe a potential W pattern in the works here on MERC, Mercer International Paper Products. Downtrend line was broken out, rallied up to that first resistance there around 1332, came back in, back testing or near back testing now. I don't have a hard buy on this one now, but it's an interesting chart and one to watch. I just want to throw it out there. So as far as levels, well, maybe next run up to that 1332 level, and then I should give you one more if it starts to pan out. And as I said, if you are interested in any of these setups, just below this video, post your questions, and if you have any questions on any of these setups, I'll be glad to answer it. SAH, this one I'm just going through here as a potential short. Sonic Automotive had a trend line breakdown and back test right here, and it went below this $32 support level. That was a pretty decent support. You can see all the reactions, 1, 2, and then it broke out. And so support once broken becomes, resistance, 1, 2. Resistance once broken becomes support, and you can see it did. It tested that level several times, then it broke it, and now support once broken once again becomes resistance. So it's objective. However, the market's strong right now, so I'm not so keen on these shorts. The PPO is constructive, even though we put in a divergent high, but then one to watch. And again, I'm sharing these trade ideas because I like to always keep a mix of long and short trade ideas for both diversity. Even in my own portfolio, I like to trade mixed, to short the most bearish stocks or commodities or other asset classes and go long the most bullish. And you can see that maybe a little flagging action too. So, and remember, here's a SAH. I'm pretty sure is not a major component of any top component or of any major index. So it is very possible. There's a lot of stocks that have been going down lately. So this one could most certainly play out. And you see my target's 28, the next target, and there's other potential levels there. Let's move on from that one. But again, if you were to short it, it's objective here at 32, resistance with a stop not too far above, or on a break of that bear flag pattern, an impulsive breakdown. That would be your next objective short entry. Only a few more to go here, and we'll wrap it up. I know, long video. ASNA, Sena Retail Group, apparel stores. I'm not familiar with them, but then again, I don't do a lot of clothes shopping. My wife might know them. There it is, downtrend line, breakout back test, and let's give you another trend line here to watch. It's objective, but the breakout wasn't very impulsive. That's why I wouldn't add this as an official trade idea. It could back test for a while. Basically, you want to see this one start to move up and take out that previous reaction high right here, and then that previous reaction high, and could run. Again, not one of my favorite, but again, want to throw out these ideas, let you guys decide what to trade, especially if you're looking for ideas, because my trade ideas have been pretty light lately due to market conditions and everything else. RIOT blockchain. This is a Bitcoin play, an indirect play on Bitcoin or any cryptocurrencies, and they do their own thing too. They don't just do cryptocurrencies. They have software. Blockchain has other applications besides cyber currencies. A lot of applications. So this company, but they tend to move. It tends to move, ebb and flow with Bitcoin. But nice downtrend line and big divergence. So it's cheap, low priced. Means there's some risk involved. But I'm just throwing these ideas out there. And I'm going to add some levels right now. If it does break out, you want to see an impulsive break above that downtrend line. I'll be very clear. This is in an unmistakable downtrend. There are no buy signals on this stock. none whatsoever, but it's setting up potentially bullish, so it's a setup. There's your previous reaction low. Traders focus on those. That should be support, and we're right there now. Now, an aggressive trader could take a shot here at support, and I'd give it a little room because sometimes they want to bring it down, give a little false breakout, bear trap before they ramp it up. So you can certainly take, at best I'd do a starter position and then add to it if and when that trend line broke out. But again, as far as I'm giving you some, trades with a lot of profit potential, these are aggressive trades. These aren't your Procter & Gamble and Coca-Cola or even Apple. But upside to that first target from where we're at now, about almost 40%. That next target, that's about 85%. And you can see, here was the last trend from that level. I'll have to move over here so I don't move the trend line. From that 130 level, before all said and done, that stock rallied 365%. So there it is, 1% a day for you if you were in that trade, but it didn't take you a year to get there. It only took you about 5 months to make that 365. So that's more than 1% a day. Anyways, let's move on to the next one, which would be GBTC. Why not look at Bitcoin if we're going to look at a stock like that? So GBTC, I posted about 2 weeks ago. It's on my radar, potential setup. I don't see any buy signals yet. I gave a couple different charts, maybe even Bitcoin futures, but I have pretty decent support right here, about 832 to 882 or so. We had a bullish falling wedge. We caught that one. That was an official trade. We caught the bulk of that, and then got out right in time. It hit that downtrend line reverse, but it's back to that level now. If it goes any lower, it will have again another divergent low right here. In fact, on the daily, we didn't even have positive divergence. We did, I think, on the 60-minute chart on that trade. I think we used the 60-minute chart to hone in on our entries and targets. But you can see if we hit that level again, the 832, or go a little bit lower in reverse, you'll have positive divergence on both the daily PPO and RSI, which could set the stage for a move up to and then a breakout of that line. So Bitcoin is very much on my radar. And I just showed you RIOT. There's other proxy company like Overstock is more of a Bitcoin play as well. Same thing, and you tend to get more bang for your buck here too. So if Bitcoin rallies, in other words, then you can watch these guys here. And Overstock at minimum right here, 919. That was a key level. There's an example, just like one of those I just showed you. Previous reaction low, previous reaction low. I told you those are big support levels. And look what happened when it broke. It didn't just limp on down through there. You had a huge red candle. That was a big drop. This stock dropped in a single day about 17 or so percent. But it's setting up bullish, and if that level would now be resistance, but if it could recover that level, that'd be very bullish. But even just a pop, if it pops out of this falling wedge, if Bitcoin rallies and an Overstock follows, just to get back there and back test that's a 27% gain. And with the bullish divergence, I think there's a decent chance it can happen. So these are certainly on my radar right now. And just like I said, wanted to get them out to you. And two more, Camping World, just on my list because I was going over my list of price alerts. It took out that T2 target. Remember, we hit that the other day for, I don't know, what it was, 20-something% gain, I think. We entered it back here. And that was T3 stop is down here, T1 stop. I give sometimes I'll do multiple stops. Quick traders wanting quick buck and use tighter stops. And remember, this is also growth and income trade. It pays a pretty nice dividend yield, and it's cleared that level. I just wanted to point that out, which opens the door for a continued move up to T2 as long as it can remain above T1. And then finally, it's kind of just mixed in here. I'll probably do a more comprehensive analysis, giving you individual trade ideas in the energy sectors. This is this is an oil and gas equipment and service stocks. This is Schlumberger, SLB, and Schlumberger looks like it's poised to break out any more upside. Beautiful. Look at this downtrend line. Look at this big falling wedge, positive divergence. This same pattern, whether it was on a 60-minute chart, a 15-minute chart, a weekly chart, it says the same thing. If a stock breaks out impulsively, this is what I think this one will do. And of course, it's going to depend on what oil does. Most likely, it's going to need oil to cooperate to do this. But potential for that scenario would be, you want to be safe. See these recent highs right here? Well, let's just say if it takes those out, there's your go right there. And I may even add this one as an official trade. But as I say, official, unofficial, I throw these out. I don't have time to make them all official trades. It takes a lot. I'm still behind on updating the official trades that have already been stopped out or hit price targets on the site. But there it is. 37.31 should do the trick. And that would be the initial target about a 10.5% gain. Second target about 22% gain, and maybe more. And look, when this stock breaks out and when the sector runs, they can run fast. Back here, that had a similar falling wedge and broke out at that point, and the stock rallied 22% in very short order. So yeah, you know, if you see these energy stocks popping, sometimes you break out and then you back test, like back here. And from that back test, the stock rallied 20%. So again, we'll wrap it up here. The common theme of this video, you know, these are stocks that have returns, almost all return potential, measured well into the double digits, whereas the stock market, I think if we're lucky, we might make 10% over the next month or two, if we're lucky. But there's also a lot more downside. Stock market's kind of grinding higher and you know, refuses to go down. But again, this is where I got to be careful with my choice of words, but I was about to say where the easy money's made. It's not always so easy, but the important thing is, if you like these trade setups, just don't get married to them. If they fail, you know, take a breakout and then just set your stops in place. And your stop should be commensurate with your price target. A lot of people ask, well, what would be a good stop? Well, question first, let me ask you, what's your price target? If you're only targeting this one, then you need a, let's see, your gain potential is about 10%. Then you shouldn't use a 10 or 20% stop. You should maybe use a 3-4% stop. But if you're targeting, you know, 23% gain, then you can allow yourself a 7% stop, and that's still better than a 3-to-1 risk-reward ratio. All right, so we'll wrap it up here, and oh, wow, long video. Okay, I'll follow up if I see anything else that stands out later today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.